Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. Today's agenda, we'll go through our regular schedule. We'll go through the market update. We'll go update our earnings trades and then go through Joe's analysis. So let's get started here. So overall markets, the major indices, SPX, NDX, Russell, all holding state one, same with Dow, been in there quite a long time. We'll go into those individually. Sector-wise, we had a couple transitions. So we had since last week, real estate went back into one, and then Staples XLP that also went back into state one. So we only have two kind of laggards, materials, in state two, and then healthcare's kind of beat up since the election. That's in four. So all right. You can see we're over 45 in state one, so we're technically overbought. Green pie from last week, we had 53, so we're up around 60 right now. So let's go into market pulse here. All right. Here's your state ones, from last week, we're at 43, pop back up 48, above the previous kind of little near-term high there. Back here, we got 51, 53 back here, 52, kind of been hitting right around that 50. So, we're at 48, overbought, not drastically, but, above that line of 45. So, the twos really dropped off from last week. So, all those twos went into one. We are 12. So now we're down to, seven. So that's pretty much all I can go into ones for, time being. That would be, 53. If most of those went in,
Okay.
be a pretty high one. Sorry, someone's just mute. And eight's just been pretty steady, right around 20. We're a little above 20, 22. Not much going on with sevens either. So, that kind of bottom end of the markets has been pretty steady, those eights. So, we're just getting 1, 2 type action, which is overall bullish. So, see if that continues. We look at the 1 year highs. So we just had that little blip, the 15th, with the lows kind of popping above the highs, and then we just go real high. 874. That's a massive number. We had those back here, 857, 952. Those just aren't. Those are big numbers. So you can pull back and look. Obviously not compared to those new lows back during the bear market there. But that's a bullish sign. We get these kind of big numbers. So with, you know, 1 year highs, and, a lot of them are all-time highs too. So here's the 20s above and below, the 20-day moving average for the EMAs. So last week, you had talked, getting close. We did cross, did a big cross, and, well above that. I think more importantly, the 50s, if you look at the 50s, from last week, those held. That's Monday, Tuesday. So that pretty much held, and, we rebounded up to kind of normal levels here, and, we'll see if we can get something like this, or, if it just kind of slowly, up down type thing. Um, but it's been a big move since that previous meeting there. Uh, so we'll go into the charts here in a second. Yeah, another big transition day too here. Uh, State one's 233. So it's been getting a lot of big state one transitions. So I think Joe put out stats on that for. So Bullish bearish, not much else to glean from that. Let's pull it up real quick. We just had kind of didn't, got down in that 50 range and, never crossed and rebounded up from that. We do get that sometimes. Yeah, I can see back here too. Same type of thing. Got around 52, held, ran back up, and then, what was that, like February to, 2 months later, we got the crossover bullish bearish. But, we've just been getting kind of these things, like little blips, pullbacks, and then, cross back, little blip, little blip. This is a minor blip here, obviously. But kind of the opposite of, when we had those, that kind of bear market, we get the little bullish blip, that type of thing. Uh, overall, it's just kind of, looking bullish overall, and seasonally wise, we're getting into the end of the year, and that's normally, good returns overall. And I can pull up that, seasonality real quick. There's Russell. If you look, this is the average just since '07. Typically, November, December are the best for Russell, with December being number one. And if we pull up SPX, November's number one. You got July, but back, pretty much here on average, the last 3 months are, green with pretty strong overall. So seasonally, we are looking bullish. So let's get into SPX here. All right. So we talked here. This last week we were just saying need this hold that target three. That's kind of the big downside thing we are talking about. That in the 20-day kind of mirroring over each other. Yeah, we talked if we can hold that, we can get a good boom up, and we did, and we hit all-time highs here. 6025. Previous was 617, so all-time highs. I know we're down a little today, but you know this turning into support here. Uh, big big bullish indicator, and obviously we don't know how high this can go, but I would be tracking the 20-day as kind of the key thing, holding above that. And, we do have downside, this is support 58, just call it 80, that kind of range. But, this is one these big moves up that we've seen in state one. This is kind of like an ideal thing where we pop above, retest, and then, take off. So, I mean, it's possible we could just, keep cruising till the end of the year. But, you don't, no guarantees there, but obviously a very bullish pattern there. Been in a long time, more than average, and, a lot higher than normal. So it's been a really good state one. Let's go into actual charts. I'll throw up the lines here. So that's 58, kind of bottom range. So you have that, top range 62. So that'd be up here, 6,200. So really, for SPX, I'm watching, 20 days, staying above that. Each day, it's going to be going up, but, as of yesterday, 59.17. So, pretty far off of that. But, as long as we maintain that 20, just that trend kind of keeps going up. So that's, first and foremost what I'd be watching. Obviously to the upside, the all-time high, 60.25, the previous one, 16.17. So, kind of in that range. Just getting them closing above that would be very bullish, obviously. But the keys are staying above 20, and then below that's a 50, which is pretty much right at the bottom of the range, 5,800 area. So those are two kind of key things to watch SPX wise, and then the let me clear this. The target three also 58.79. So it's kind of right in between 20 and 50. So got kind of three levels there for downside, and really just one to the upside, and then 6,200 above that. So uh, uh, yeah, that's it for SPX. All right, Russell. So same thing, in here a long time, pretty much double the move. Uh, just, great state one overall. This one came below target three, so, it came down to target two. I prefer to see that target three hold, but this one's been a little more volatile and definitely outperforming things, recently. But this right here is the new all-time high, 2466. Previous one's 2461 a long time ago. We'll look at it in chart, but overall, I think still staying above target three, is good overall for the market, Russell. So let's look at the actual charts here. So you can see last week we talked about holding at 2,300 and 50-day, obviously, but um, we were right on there. We tested kind of right here too, right at 2303, and just took off from there. Got above that all-time high, and that one is a while ago. That's back here, 2461. So this is back in November 8th, 2021. So pretty much 3 years ago. Long time. So, um, but did make a new, not closing, but intraday all-time high. So, but so ranges here firmly above the 2,300 held, which is very important. That back here we had that, touch and, drop, like 300 points. So, back, we tested here, 1, 2, 3, four, pretty much 4 days, and then just took off, top of the range, 2,500. And every 100 pretty much you can pencil in for support and resistance. So near term would be 2,400 support. The 50 days way down here below bottom range, but just call it 2,300 area. So downside you got 24, then all the way down 23. Upside you got all-time high 2,466, and then top of the range 2,500. So that's it for Russell. All right, just I'll pull up 10-year. 10-year has been retreating some. Just I was looking at the charts here, and the previous high back here, like 4.7 something, almost 4.8. If you go even further back, we got up to like 5. So it's just kind of like lower highs, lower lows. It's been seeming like. So this, it seems like we hit near term top here around 4.4, almost 4.5. So it just seems like it's kind of slowly grinding. We'll see if we try and retest or drop down below, but obviously anything below 4.5's good. Lower better, but um, just have to see if demand keeps up for those treasury auctions. And let's see, Fed wise, so December. Pretty decent shift 1 week, 70%, nothing guaranteed here. I would say what we can bank on is between December and January that we'll do one cut here. They still got one cut. So between those 2 months, I would expect a cut. And, March is, kind of 50-50 on whether you get another quarter cut or not. So it's kind of slow, take it as it is. And, I don't think just watching the numbers come in for inflation, which, pretty much been in line, and then also unemployment. Next week we'll get, unemployment again. So, Friday there. So, instead of pulling up the um, Fed balance sheet, I was going to pull up this one, the money supply. So here's, I think it's yeah, this is 3-year chart, right? Here's 5-year, here's 10-year chart. So here's like your normal 2% target inflation. As we zoom in here, here's COVID. Here's your inflation, right? So January, and I don't know why they label this in billions. So you look at it, it's like, 21.1 K. It's might just call it 21 trillion instead of 21.1 thousand billions. So these are actually trillions. Um, and this is money supply, deposits, cash on hand, all that type stuff. um, but you go from here, January 2020, 15, just call it 15, up to here, 19. That's like what, 26, 27% return. Here's like 40%. There's your inflation right here. I mean, if you're just talking in general. So, and if you look at this chart, we kind of peaked back, market was peaking right around here, November, December. That's pretty much when they started signaling. Um, and we got the drop off, not a big drop off, mind you. This looks big, but in the scheme of things, like a 5-year, it's not a big drop off. So 21 to drop to trillion. Whereas back here, we're adding what, like 4 trillion, in a year. So anyway, so we had the drop off. April's pretty much the bottom. This went flat pretty much here, up, down a little, but all 20.7 trillion. Then, January 2024, we're back climbing back up. So this is liquidity wise, I mean, this is bullish for stocks. I mean, not for your pocketbook and inflation and all that stuff, but prices, but stocks, I would think this would be at least bullish near term, unless we get into some like exponential type thing. But they're pumping back money in. So, even though the balance sheet's like really dwindling, I mean, not dwindling, just, barely dropping, week over week. But, this one kind of, since January, we've thrown another, you know, half trillion in. Yeah, that'd be so 20.7. So they're pushing liquidity into the markets there. So, uh, yeah. Anyway, that was it. Market wise, yeah. One other, the bank balance sheets. I saw one. Yeah, that's still an outstanding issue. Yeah. So, yeah, as the rates, got pumped up. These all swung. Obviously, you can see back here we've had negatives. Yeah, these are available, but the extent, here, this is uh, billions of dollars on banks' balance sheets, and they can sell these held maturity. With we all remember Silicon Valley, that type thing. But it's still an outstanding issue. So always keeping my eye on that. So all right, I'll open up to questions, comments, market overall.
I think it's very bullish for the near term.
Yeah, at least I would think, through the, end of the holiday season here.
Yeah, I've also heard that there's a large number of corporate buybacks that have been announced that are all going to take place in the fourth quarter. So that'll add more buyers to the market. So I
Yeah,
think it's pretty well. I don't know if there's any way to. I just heard. I don't know if there's any way to quantify that, but
yeah, I've been,
buybacks happening.
I mean, we have some buyback data and I'm trying to get to the bottom of it. Uh, yeah, it'd be nice to have that kind, I mean, because it's important, like people, companies are buying back their stock. That means there's less share, means EPS are automatic, if they, if the earnings stay, their actual revenues and all that stuff stay flat and there's less shares, the EPS goes up, it's just,
Yeah,
so it's an important thing, metric to
and I
track.
heard the big, like Google, Microsoft, and the Magnificent Seven. They're all buying back. They've all announced buybacks, and or most of them have, and a lot of those are
Mhm.
taking place in the fourth quarter.
Hmm. I didn't hear anything about, yeah, I know they just kind of keep coming, a lot of companies buy back, just consistently, but I haven't heard anything about like a big fourth quarter like splurge or something, but yeah. Okay. Thanks, Sadir.
Uh-huh.
Okay. Anyone else? Questions, comments? Okay, we'll go through earnings real quick. Um, I guess we can, next quarter, I mean, we're getting close to the end here. So, yeah, I'm planning on Q4 release here, the 18th, that meeting, right before holidays here. So that'll be the next one out. Okay, yeah, I'll just kind of jump through these, see if it goes quickly. Yeah, just one outstanding, not much change week over week here. So, um, the bullish runner, I think we had a change there. This one's been, good overall. Um, yeah, it's this one DHI. Got a small loss on that one. So, uh, 5 out of 6. That's been one of our stronger ones. One of our weaker ones is, these two are kind of, yeah, not much going on. This is, we're down here. Bearish runners, all four are down. This one's, borderline. I think it's up pretty good today. So yeah, the bearish runners haven't been good. It's kind of that in the non-movers haven't been good, but this one's up, but overall we're down. Had a couple losers in there, PI and pizza, and one winner. So this one hadn't been good. So really, we got the bullish runners outperforming, vol rise definitely outperforming, and then these two underperforming, and these two are pretty much up a little. Um, vol rise, we closed another one out. I think actually maybe two in the last week. Yeah. So this one was pretty much flat. Bed, uh, is that Bath and Body Works or whatever? And then this AMBA really spiked. So this one, had a huge profit, before it's time, but yeah, definitely doing good here. This has been one of the stronger ones. Had two losses, barely, two losses and some good spikes there. So this one continues to do well, and we're up overall definitely. But just got these kind of two. Maybe we can turn them around. Non-mover bearish runners, but um, yeah, these two are definitely shining. Bullish runner, vol rise. So, all right. Any questions, comments on that? All right, Joe, I'll hand you the reins here.
All right, Josh, thank you.
Mhm.
I like that M2 analysis today. Thanks for that.
Mhm.
Let's see here. All right. Yeah, with the market's making all-time highs, I thought it might be a little bit interesting to go back and look at some longer-term charts. So let's see if I can. There we go. I thought I'd go back to 2009. A lot of people say, we're in the seventh, eighth inning of this bull market. Secular bull market started in 2009. So I thought I'd start by just taking a look. Here's the S&P. And, my thinking here was, is there any Elliott wave that really jumps out at me? And in all three indexes, I didn't look at the Dow. I looked at SPX, NASDAQ, and Russell. Nothing really jumped out. With the exception of, the COVID lows, we had the rally and the bear market, and then rally again. So, just typically, when the market's, the main direction of the market is typically a five-wave pattern. I really couldn't see anything there, more of an ABC, the upside, which doesn't make sense in the context of a bull market. But then, you talk about the symmetry of the waves. And as it turns out, the low of the March low, COVID low of 2020 in the SPX, remarkably, the both legs, the March 20 low and the, I guess it's the November 22 low. Right now, S&P, basically those two legs were symmetrical, which I found pretty amazing. About 670 points. That was the first leg up. We got the pullback, and basically the target in kind of rough numbers was 60-30, 60-25, and lo and behold, the target actually, was 60-37, and we got to 60-25. So I don't think it necessarily means anything. I just think it turned out to be, there's some symmetry in this ABC move to the upside in the S&P. I then thought it would be useful to go back to the COVID lows on a weekly chart and just, does anything jump out? And honestly, outside of the uptrend and the bear market, we had, kind of the same thing. We've got obviously pretty tight channels, to the upside, but, one thing, as I'll move through NASDAQ and Russell also. Here's NASDAQ, and NASDAQ, if you take the two legs, that's actually exceeded this last run has exceeded the 20 to 22 run by about 600 points. And going back to the 2009 lows, back to SPX, it basically has run, a multiple of 9 times since those, lows in March of 2009. NDX, I think we talked about this not too long ago, actually has run, almost 19 times from that low. And as I say, this recent run has exceeded the 2022 run by about 600 points. On, the weekly chart, really quite similar, just, maybe a little more downside volatility, but, just surprises continue to be to the upside. And then, Russell, far different. Russell has basically run about 6.5 times, from its March 2009 lows. And as we recall, and here's the weekly, you know, Russell was the first to top before the, 22 bear market. And so, here's this weekly chart. I thought, we had a real good run up here. This was into February, March of 21, that first, really, I guess, exhaustive run. And then, it was back when I think it was Facebook at the time, was rolling over kind of the first to roll. And this was in the October, November period. So I thought I would go back and look at the pie because Sudhir, as you suggest, it looks like, we got plenty of room for upside. I don't really see extremes, and certainly we don't in the pie. And Josh talks about, the seasonality. So going back to when the Russell topped, and again, the fact that it had a new all-time high a couple of days ago is why I just thought a longer-term perspective might be in order, to talk about a little bit. But from a pie perspective, that first run-up in February of 20, right in here after the big run-up, you had, a really strong green pie. We got up into the 80s. That was February of 21, okay? And then if we go further out into that fall period in November, not a surprise, but the pie topped, around 70%, before we rolled over into the bear market. So, we haven't been anywhere near those numbers for quite some time. I went back and looked at the pie this year. I mean, we were real high in the pie early this year. We were in the 80s, on green. But aside from that, it's been pretty neutral, and certainly that's where we are now. What have we got? 60? Yeah, basically 60% on the green pie. So I think, as a couple of you pointed out, it seems like there is room to the upside here. Let's see. SPX, Josh was talking about, target 3 being support. I would certainly agree with that. And the NDX would be interesting. This 21,000 level, see whether or not, it turns out to be, kind of a pretty good barrier. We're down, a little bit today. So I think that's an important area to watch. And then, as Josh pointed out, Russell, came back below target 3 and has taken off again. Obviously, after last week's NVIDIA earnings, the market's done nothing for the most part, but go up. Looking at, there's SPX. So, we're at 72 days in state 1, average being 43. So it'd be worth going back to, some of our longest periods for, state 1s. So here we are, at 72, we're, tied for the 14th longest state 1. What did we have? About 60 of them we were talking about last week. So, a couple, so there's clearly room to go. And this, we have, let's see, post-COVID, there have been 4 periods in the SPX where we've had, state 1s greater than 72 days. So, potentially still a long way to go there. NDX actually are shorter right now at 52 days, as is Russell. So we're right around the 20th longest period. And since COVID, we've had 5 longer periods. And actually, one thing I really didn't realize till I was looking at this today, right before COVID hit, we had monster long state 1s. There it is, 90 days in the SPX, right up into February 25th of 2020, from the middle of the fall. So that whole COVID sell-off, on top of such, strong state one, same thing at NDX. It's which one is it? Here it is. Middle of 93 days, and something similar to Russell. So that really tough at the time. But with Russell, we're at 52 days as well. And one thing I'm not sure what it says, but certainly the performance speaks to this. We've only had one period longer than 52 days in state one and Russell since COVID. And obviously, compared to S&P and the NASDAQ, the Russell has underperformed. But it'll be interesting. And I think, also important to keep an eye on, how long this thing stays in state one. The pie would suggest to me we had potentially, plenty of room to breathe with excesses. So let's see if we took the length of, this is a long way off in Russell, but if you take the same length of this leg to here, you got another 25% run up to 3,100. Basically 3,100. If that's going to be a symmetrical ABC to the upside, that's not happening anytime soon. But that's the number 3,100. We've already gotten there in the SPX, and NDX has already exceeded. So just a little bit of a longer term perspective today. Markets certainly look healthy. I guess with about 480 of the S&P earnings having reported, we've got 5.8% growth rate is the stat I've seen a couple times. They're talking about double digits in the fourth quarter. I'm not sure if there's cyclicality to that. We got double digits in the second quarter of this year and something similar to this 5.8% growth rate in the first quarter. So, it's hard to believe, Josh, but there you are on the 18th, putting out another earnings program. So, anyway, never know, but it does look like we got some pretty good tailwinds to the market. So, happy to take any questions if anybody's got any. If not, thanks, for joining, and hope everybody has a nice holiday tomorrow.
All right. Well, thanks, Joe. Anyone else before we wrap it up? All right. Well, thank you all. Have a great Thanksgiving, and talk to you next week. Thank you.
Thank you.
Thank you. Happy Thanksgiving.